All right, hello everybody. I'm back once again. Haven't posted in almost a month now, but the reason for that is I was quite a bit sick, but also nothing has really changed, right? The markets have bounced quite a bit, but nothing has really changed. In my view, this bounce that we observed can actually be attributed to the market being too optimistic, one can say even. As you can see, this was the drop that we had when I did the last video. It was right here, and ever since then we've seen a bounce, 15.6% bounce on the Nasdaq. It did not hit the all-time high, but it was pretty close, and ever since then we have gone down. As you can see, we took this high right here, took the liquidity and went down. Okay, but essentially to me nothing has changed, right? The carry trade is still in action, and the data that we've been getting, it's been quite mixed, but it's interesting because yesterday we had the PMIs and ISM manufacturing price as well as the construction spending data, and the manufacturing prices were above expectations, which is not good. This is inflationary, right? But then construction spending went down quite a bit, which is recessionary, right? So not good at all. And this can be observed in the price. Yesterday we've had above 3% down day on the Nasdaq, fueled by NVDA, which was down over 10%, as you can see right here. Overall, the tech, the semiconductors were pretty bad yesterday, and NVIDIA, it had earnings, and the earnings were good, right? They beat, but the forward guidance was not that great. And let me tell you, NVIDIA is a great company. Like, a very close family member of mine has been an employee of NVIDIA for quite a long time now, and I can tell you they're pretty good. Their products are insane, and the potential is insane as well. But then again, the pricing of the stock is insane as well, right? So the thing is, Wall Street is not going to accept anything but perfection for NVIDIA. And the same way that it went up explosively, trillions of dollars in market cap, well, yesterday the biggest market cap loss of any company ever, right? The same way it went up, it can go down, right? And yesterday they also received a DOJ subpoena for antitrust lawsuit, which did not help at all, right? And so we're gonna see what's gonna happen now. But let's just go over the data that's about to follow. So in about 5 minutes, we're gonna get the JOLTS openings data, and then tomorrow we have ADP and unemployment claims, and then the Friday is the big guy, the big dog. The average hourly earnings and non-farm employment change, which is very important. And then next week, and I'm just speaking quickly here because I'm trying to keep this video as short as possible because I'm going on a small vacation. I'm not going to be able to post for a few days unless, of course, something very big happens. But next week we're going to have the CPI, right? Very important. Then the PPI, and then the week after that we have the Fed decision, right? And the problem is we are expecting cuts right here, but the markets have already priced in those cuts, which is not good. And also, what is the reason for the cuts? Is it because inflation has been defeated? I don't think so. It has gone down, but it's not been defeated. It is because of the labor market. It's because of recessionary fears, which is not great at all. Like, if we see cuts because of this, we can expect further downside. And I do think that we can expect that for sure. Okay, let's just go over one chart real quick. And this is the Nasdaq chart, and it is a logarithmic chart. So it's keeping in mind the percent change and not the dollar amount. Okay, it's used for longer term analysis, and we're just keeping it very basic here. It's just like a very basic TA in long term view. Nothing fancy. I'm using a lot more stuff, but here we're just gonna use simple trend lines. Okay, so this is the dot-com bust. If we connect this towards the recent highs, we can see that we are actually knocking on the door of this trend line once, twice, thrice. Okay, so this is very dangerous. We have this upsloping trend line, and then we have this one, which is very dangerous, because if we see this to this trend line, it's like 25% drop, but to this one it's 80%. So I don't believe it's gonna go down 80%. But let me tell you this: I am bearish. Okay, I'm bearish, and I think that we are heading towards recession. Of course, nothing is certain. We have to see the data. We have to see what happens. Seasonally speaking, September has been a bad month for stocks, so we're about to see what's actually about to happen. Okay, now Dow Jones Industrial Average. Again, logarithmic chart. Going back to March of 1929. Okay, if we connect this, we get this trend line, and we're knocking on the door of this trend line right now. Okay, you can see 1, 2, 3, 4 times. So if we get rejected here, again, over 70% drop. Like, I'm not saying that's gonna happen. I'm just pointing it out because most people don't look at logarithmic charts. But you can surely see we have quite of a scary trend line here, and of course the overall channel right here. Okay, so also you can see the utilities against the QQQ. Oh, I'm sorry, the QQQ against the utilities. You can see as the market was going up, the utilities were going down, right? So this is the QQQ against the utilities. So when it goes up, the utilities are going down. And then as we see the market roll back over, we can see utilities are going up against the tech sector. So again, a risk off indicator. Right, so I think this is it. Very general view, and we're about to see what's going to happen with the data. 1 minute to the data, so I'm gonna end it here to see what's going to happen. Thank you guys for watching, and I'm gonna do another video pretty soon because we're gonna have quite a lot of important data. Peace.